This is the capital plot. The skyline of the United Arab Emirates has always been a silhouette of ambition. But look closer at the data, and you'll see the narrative is shifting. It's no longer just about the tallest or the first. It's about a fundamental decoupling from global volatility. While much of the West is grappling with a liquidity crunch and high interest rates, the UAE is operating on a different frequency. As the International Monetary Fund, IMF, recently noted, the UAE economy has demonstrated broad resilience, with capital inflows and rising domestic liquidity supporting an increase in central bank foreign reserves, International Monetary Fund, 2025. The question isn't whether the market is growing. The question is, how long can this outlier status last? Let's talk numbers. Between late 2020 and the end of 2023, average residential sales prices in Dubai didn't just climb, they surged by 37%, International Monetary Fund, 2024. But this isn't a uniform wave. The heat is concentrated. It's a luxury-led phenomenon. We're seeing a persistent undersupply of prime stock that is driving international ultra-high net worth individuals to treat the city as their primary safety deposit box. Experts have pointed out that despite these gains, Dubai remains a relative bargain globally. $1 million buys you 1,130 square feet of prime space here. In New York, that same million gets you barely 350. Emerald Publishing, 2023. But the real story for the savvy investor isn't in the completed penthouse, it's in the dirt. Land and plot transactions are becoming the ultimate hedge. As the IMF's 2024 Article 4 consultation highlights, the non-hydrocarbon sector is projected to grow by nearly 5% this year, fueled by a construction and financial activities expansion, International Monetary Fund, 2024. We're seeing institutional money move into large-scale land acquisitions as developers race to bridge the gap between high demand and limited ready inventory. When you buy land in the UAE right now, you aren't just buying square footage, you're buying a stake in the region's aggressive Vision 2030 and 2040 urban master plans. Meanwhile, Abu Dhabi is playing the long game. The capital's real estate market is increasingly defined by socio-cultural sustainability and participatory design. Frontiers in Built Environment, 2025. It's less about the speculative flip and more about government policies and economic drivers, including significant public-private partnerships. The focus here is structural. Recent reports highlight that Abu Dhabi's economy is showing increased synchronization with systemic economies, reflecting its openness to external demand. International Monetary Fund, 2025. It's a market for the institutional veteran who values stability over the adrenaline of Dubai's high-frequency trading. Is there a ceiling? Of course. Every cycle has its gravity. The IMF warns of the risk of excessive price growth and affordability concerns as the market deviates from equilibrium prices, International Monetary Fund, 2024. Furthermore, the sector remains inherently cyclical, where economic upswings attract new entrants, but downturns can trigger attrition. Goel, 2025. But here is the takeaway for today. The UAE is no longer a peripheral market. It has become a core asset class. Backed by strong credit fundamentals in the banking sector and innovative policies that make the region a haven for investors, the uptrend is projected to maintain its trajectory. Reviewing the impact of liquidity on real estate 2026. In a world of uncertainty, the UAE is betting on its own foundations. The question is, are you on the right side of the trade? Subscribe for data-driven UAE market analysis.